Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are, as always, coming to you live from the CNBC-TV18 Motilal Oswal studios. And, of course, over the next 2.5 hours, we'll track markets, corporates and everything. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Hi, good morning. It's just like one of those days, right, when, or one of those weeks rather, when nothing much is happening. There's no major trigger. So it's just kind of status quo, perhaps.
It's quiet, right?
It's quiet, yeah.
But the quiet was
good.
Quiet is good. all quiet. But, it was not very quiet towards the end yesterday. Things did accelerate on the downside. And I think that's the risk here. This is what we were saying yesterday, that maybe, not very much in terms of cues new. We pick up from where we leave off on Friday. US markets, of course, were shut last night. So, again, this morning, there's not very much in terms of fresh cues to trade off. I think, what you should pay attention to, of course, one is US futures, which will pick up volumes by mid-afternoon or so our time. But I think US Treasuries and how US Treasury futures trade through the course of the day, I think will also set the tone. The reason I'm saying that is because, once again, what US Treasuries do have become a stark reflection of what market expectations of US interest rates are going to be. And they've been going up and up. So the last full session with regards to US rates market was Friday. And there we have, the price action gives us some hope. What happened on Friday? Basically, we saw a breakout attempt on the 10-year US Treasury yield above the turn of the year high, which was 3.89%. We got to almost 3.91 at the day's high on Friday, US session. But then it was quickly rejected. We ended about 10 basis points lower. And many are paying attention to the price action from Friday to say that maybe things have stretched on too much in one direction, and perhaps there is perhaps a period of consolidation, a period of cool-off ahead, and I think that should give some breathing space. But, this is just kind of reading the data from the price action on Friday. We get real prices, all day today, and I think that perhaps should set the tone more than US equity futures, etc., which, of course, unless and until they themselves see some big moves, that becomes the primary driver. This week is also important for geopolitical reasons, and I think we've not kind of spoken about this. Markets tend to price everything and they move on. The incremental impact keeps reducing. I said this when the Adani Hindenburg news story broke. And just think about it. It's going to be 1 year since the Russia-Ukraine conflict broke. It broke on the 24th of February last year. A full 1 year has passed, but we kind of talk about it very, very occasionally now. But because it's the 1 year anniversary, things perhaps could pick up. There could be event risks lined up this week. So today, for example, we've got the Russian President Putin, who's going to deliver a State of the Nation address. The time is about 2:30 or so, 2:30 or 3 in the afternoon, our time. So I think markets will pay attention, especially after US President Biden reaffirmed their support to Ukraine by sort of making an unscheduled stop in that country, pledging another $500 million in military aid and more. So I think, in that sense, this becomes important to kind of track. Let's just come to the market here, right? The Nifty, as I said, it was all quiet. But starting about 11:30 or so yesterday, things started to slip. The final close was 0.5% lower, which was about 95 points. We ended near the 20-day moving average, which is at about 17,838. The close was 17,844. So practically, you were dancing on that level, 20-day moving average. And that kind of becomes the pivot in either direction, on the upside or the downside, depending on which way the market closes, that the 20-day comes into play. If you do get a slip, I think the low that we saw recently of 17,720 should not be broken if the correction were to continue. The SGX this morning is indicating an absolutely flattish kind of start, very tentative. So I think we'll have to give it some time. The Bank Nifty, the second other benchmark index, bounced off a level we highlighted yesterday morning. Actually, it bounced off exactly off those levels. 40,699 was that level. We closed at 40,702. So, it held, I think, I shouldn't say bounce off. That's the 50% retracement of the up move that we've seen from the 30th of Jan to the high of 16th of February. So again, that becomes pivotal. The next support, in case things start to slip again today, is 40,400, which is about 400, 500 points lower from where we left off yesterday. That's a 61.8% retracement, the golden retracement of the same up move from the close in January, 30th of January to the 16th of February high. So these are some levels to watch out for. I mean, it should be, hopefully, fingers crossed, a quiet session and perhaps a consolidation kind of a session and not a slip like what we saw yesterday. But we'll find out. And I think, with all that is happening on the global front, especially the US rates market, it should have a continued influence as well. Guys, hi, morning.
Hi, morning. Absolutely. It's really a lackluster market, right? I mean, insipid as well.
Yeah.
If you look at what happened intraday, there's a lot of volatility. So yesterday, the Nifty fell, 150 points from the day's high. So in that context, intraday, there's a lot of movement. But by and large, the headline index has not moved anywhere in the last 1 month. In fact, it's facing resistance at the 18,000 level on the upside. And the market has now closed below the 20, 50 and the 100-day moving average. So, these are a few markers, 17,800 on the downside and 18,000 on the upside. Now, there was selling once again by FII. So it's been 2 days of consecutive selling, almost 800 crores of selling from FIs in the last 2 trading sessions. So that's not a good thing. And I'm watching the financials very closely because that continues to be a bit of a drag. So in the last 1 month, the Nifty Bank is down about 5%, and that's been dragging the overall market as well. So let's see how that shapes up. Now, a couple of things that you want to watch out for today. And through the course of the week. It's F&O expiry week, so that assumes importance. Also, you have the Fed minutes that come out tomorrow, and that will give you an indication of how aggressive or, what the rate hiking cycle could continue to be from the Fed. Remember, the fight against inflation is not over just yet, so the Fed minutes do assume importance tomorrow. And then you have a lot of earnings coming out from corporate America tomorrow over the next couple of days, whether it's Walmart, Home Depot. You'll get a sense of which way the consumer trends are shaping up, because there as well, there is an expectation that as we head into a global recession, consumption has slowed down both globally as well as in India. So, I'm going to track a couple of these things. But by and large, you want to watch out for 18,000 on the upside and on the downside, a couple of the levels that, Prashant was mentioning. Today is going to be a really quiet day. The US markets were shut overnight as well. So let's see how the cues shape up.
Well, that's right. Taking everything into consideration, I'm wondering whether or not a bounce is due. And the answer could be probably yes. If your gut is that 17,750, 17,720 odd level will hold out, then we are trading at the lower end of the band. We're only around 80, 90 points away from those levels. The PCR has moved to around 0.74. Remember, normally when it moves to around 0.7, we see a bit of a bounce, and the FIs have added shorts, so they're slowly moving towards that 80% odd mark. The calls are being written very aggressively. Gay abandon. We're just seeing call writing has become too easy. So maybe the bears are getting a little complacent. Yesterday's fall, I'm not too worried about that because the institutional participation was really not there. The volumes were very, very low. If you're looking at the gross volumes, the FI gross volumes were 40% lower in comparison to the average that we saw last week. And even the DI participation was lower. It was around 12% lower in comparison to the gross volumes that we saw in the past week. So the fall came on very low volumes. What do the FIs do in the F&O market? Well, they added shorts. They added close to around 7,500 short contracts. The short positioning is moving towards around that 80% odd mark. They bought more calls than puts, but they're writing calls very, very aggressively. And yesterday as well, they wrote close to around 3 calls for every 2 puts. And just take a look at that. 17,900 calls, 18,000 call. Between them, there was close to around 80 lakh shares getting added out there. So there was very aggressive writing being seen at those levels. The Nifty Bank, well, that needs to give up this underperformance. Last 3 sessions, it's down close to around 1,000 points odd. We need to defend that 40,400, 40,500. If that is the case and if it could perform a little bit, at least for a couple of trading sessions, then we are bracing for a bit of a bounce. But it's crucial that we hold on to the recent low. That's a 17,720 and the psychological level of around 17,750. And maybe, in fact, we bounce towards that 100 and the 50 DMA, both those levels up for you on the screen. So the SGX Nifty is suggesting a bit of a quiet start. But there are, various parameters in there that could lead to a bit of a short covering bounce. Let's see whether or not it plays out today, guys.
Okay, well, before we start, let's tell you what's lined up in the next half hour of the show. We'll get you a lot of updates from the markets across the globe. Mark Matthews of Bank Julius Baer and Company will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with our market expert Prakash Diwan. So do stay tuned in for that. But first up, let's begin the day with some cues coming in from, the global arena. Jonathan Garner of Morgan Stanley has put out a note where they say the US dollar has stopped falling, geopolitical risks are rising again, and concerns remain over a prolonged downturn in semiconductors. But forward earnings estimate revisions are inflecting upwards. Valuations remain low, and China's economy is recovering rapidly, and fund flows can probably build. He says they prefer China, Korea, and Taiwan to the ASEAN region and India, and are overweight on the IT sector.
Okay, some money market views as well. Bhaskar Panda of HDFC Bank says overnight dollar index is holding around the 104 levels, while oil prices remain firm on the hope of China recovery. In India, he says recently released trade data showed exports have declined in the back of tepid global demand. He says today, Asia ex-Japan currencies seem to be poised for consolidation, and hence he expects the dollar INR pair to trade in a range of between 82.65 to 82.85 to a dollar. Bhaskar says recent inflation data has brought back the specter of another rate hike, possibly a possibility in the April MPC meet.
Okay, and on the bonds, Bhaskar Panda says bond yields have mildly moved higher. He expects a range-bound movement in the yields today. He says the 10-year benchmark bond yield is likely to trade in a range of 7.35 to 7.40% for the day.
Well, a lot of stock-specific action to track for you, and we get to that in just a bit in our special Top 10 segment. Well, we're looking at Bharti Airtel, ACC, Ambuja Cement, Tata Power, Adani Power, Kotak Mahindra Bank, GR Infra, Minda Corp, Precall, as well as Interglobe Aviation. All stocks are likely to react to positive news flow. Good start, guys.
Okay, good start. Well, but lots to talk about in terms of cues for the day.
Oh, absolutely. And